Now, in economic news, Korean exporters' price competitiveness is sliding, with a related index hitting a 6-year low on the back of the strong Korean won. Shin Se reports.
Korea's exports, a key driver of the economy, are feeling the heat from falling foreign currencies and the strength of the Korean won. The Korea Trade Investment Promotion Agency says the country's leading export sentiment index was just 45.4 in the third quarter of this year, the lowest it has been since the figures were first compiled back in 2009. The corresponding figure stood at 53.6 in the second quarter of 2011, but it has been on the slide ever since, unable to rise above the 50-point mark. Analysts say the fall in export sentiment is largely being driven by global currency depreciations, with multiple countries using monetary easing to make their goods cheaper on the global stage. The agency notes that while China and Japan have engaged in aggressive quantitative easing to depreciate their currencies, Korea's currency has remained relatively strong. Data by Statistics Korea, an investment and securities firm, shows the Korean won-US dollar exchange rate remained at 100.7 in the third quarter this year, barely unchanged from its base rate of 100 in early 2010. In comparison, the Japanese yen fell to 137.2 over the same period. The euro also declined to 126.1. Experts say that if the trend continues, Korea may be forced to act.
Korea will inevitably join the currency battle at some point, but the government should only make a move when the economy picks up. Korea should not solely focus on exports.
Experts say that while a weakened won alone could not revive exports given the current economic conditions, it's important to keep up with the global trend, and efforts to depreciate the local currency might be a policy to consider down the line. Shin Se, Arirang News.